Good morning and good Monday. Today is the 31st of March, so time for a market weather bulletin. I'll try to focus on Bitcoin today because I think it's important to have a good understanding of Bitcoin before making any other plan on altcoin. And the king will dictate what happened to the market next. To having a correct reading on the Bitcoin chart is of paramount importance right now. But before moving to the chart, make sure you subscribe to the channel and put a like and a comment if you enjoy this kind of videos. And without further ado, let's move to the chart of Bitcoin. We start from high time frame just to start to map level and to try to form a bias in both high time frame and low time frame. So on high time frame, let's say Bitcoin is clearly uptrending still, and there is still some room to go down while keeping this bullish structure. Actually, to break officially the structure, Bitcoin should trade below 48K. So on high time frame, we might still look for longs on this bullish structure we have here. Then we will see on low time frame how this bias can change. So I personally have still orders in place to have a swing long based on this structure, but I'm looking for lower levels. Basically, my swing long would look something like this, and again, it's along where the bias it's simply on this market structure we have here, and the possibility that somewhere here we form a further higher low to move higher. So it's a very straightforward bias formation. I split the entry in three levels, mainly using Fibonacci level and the former consolidation we have back last year, where Bitcoin consolidated from February 2024 until November 2024. The three entries are based on the Fibonacci extension of our last structure, so this low and this high. And potentially, if we keep trading on this bullish structure, try to long Fibonacci levels of a possible new lower high, higher low. So this was the last higher low, and potentially, only time will tell, Bitcoin will continue with this bullish market structure. So it's mainly a very simple and straightforward high time frame trend continuation trade setup. The three levels are barely based. The first one that is around at 70K, the first entry that is around at 72K is basically the former resistance level of this range that now potentially will turn to support. Along this level, we do have the Fibonacci pocket that is this one on yellow. So it's usually a potential level for a bounce when visited. The second entry is on the weekly demand. So just to show you the weekly chart. So it was mainly a weekly order block, but was this red candle, weekly candle that we had before this very strong impulsive move. So it was the last weekly candle of this consolidation that created or where the very strong move from 68K to 100K took place. So this is potentially an area of interest for market makers where again we can see a bounce, and this weekly demand goes from 69.6 to 65.2, and is exactly this weekly candle. Further on this demand area, we do have the point of control of this value area, So again, this very long consolidation, the most traded level of this range and point of control or the fair value of this area was exactly at 66.8 K. So I placed my second order within this weekly demand just above this point of control. The last entry is simply the Fibonacci 0.75, and is the mid-range, let's say, of this range. So the idea is simply that if the price weak down here and we get a rejection, that would potentially be a retest of this resistance level, more or less here, of this further range, so to give some room to breathe. But if we start to find acceptance and trade below range high or value area high of this range, that would be pretty bad. So I place this order, let's say, to in case the price visit this area sharply and I'm not there to buy the dip or to buy the pullback or to buy the drop. But once we visit this area, for me will also be very important to see how this the price action develop once we move down. So this is the high time frame potentially bullish bias on this continuation of this structure. But this, let's say, it's a very high time frame trade setup, is a very high time frame strategy, so it will take time to develop. So now we go back to the naked chart to see what we can do on lower time frame. So on lower time frame, we do have three factors to keep in consideration to develop our bias. The first is very simply the bullish structure. So the structure is obviously bearish, with Bitcoin having the inability to break this series of lower highs. And potentially with Bitcoin keep forming lower lows, with the last one being at 76K. So market structure wise, from the 12 hours to the daily, we are downtrending. The second factor to form our bias is the former range, basically the former range low, that is a price, a pretty wide area, more or less somewhere here, that from support, from that passed from support or from an area where the price was holding to now an area of clearly resistance. Here there was a little deviation, and again resistance here. So this again, support become resistance, is a further indication of downtrend weakness and developing a bearish bias. The last factor to keep in consideration is this second range we have started to trade since a month, since the end of February, and this is a second, let's say, or a following consolidation range after this one that was lost, where we are trading since a month, and level of this range are level of interest, where this is potentially range high or resistance, and this is potentially a range low, support. So while we do have a high time frame bearish bias because of this, and we do have a high time frame bearish bias because of this support level that is now turn resistance, we do have a possibility of a bullish bias on a lower time frame because we are kind of reaching a potential support level that is this level down here. So the bearish bias triggered the short that I mentioned in the last week video, and I took and was partially filled. This short was simply based again on structure and Fibonacci level. So just to make it a little bit clear, so the trend was down, so we look for short in a potential lower high. That is what so far seems we got here on my first entry. I didn't know where this lower high, so if this is the structure, we are coming down. I didn't know where this lower high was going to be formed, so I place my 3 orders, very similar to the long I explained. The first one on the fib pocket of this bearish move. So we follow the trend. This is a bearish move, so we look for a retest and follow a further lower high. So first in the fib pocket, second on the 0.75, and then the third one here in the supply of the last move up. So far, only the first was filled. Price then started to drop down. I took some profit here at around 81.5k, and I moved the stop loss of this short at break even. So in case we continue to further down, I do have my exposure. But in case we go down, I'm still interested to long this because bias remain, as we say, bearish for the microstructure and the former resistance level and so on. So the level to be looking for short was this level here. That is, just to clean once again, the level to look for short is composing two factors. One is the market structure. So if the market structure move down, you don't look for short on the lower lows, but you look for short in the lower highs. And was here the level to be short. Further, we did have a support and resistance level. So this was support and turn resistance. So again, this level was the level to look for short. From my approach, my point of view, the level we are trading or the level we are potentially going to trade down here is not anymore a level to look for short, but potentially to look for longs. So trying to explain further, this level is practically, if we go further down on the 4-hour time frame, is potentially this demand that we had here somewhere down here. That is potentially a support of this range we are trading since the 28th of February. To further define the level, we can also, in this case, look for Fibonacci extension. So we do get the Fibonacci pocket and the 0.75. But what is the problem? That is support, so it's potentially an area sorry, where we would be interested on long exposure, but is a support of a downtrend of a clearly bearish chart. So to long a downtrend, we do need some further indication or some further triggers in order to take a possible long position, because it's completely different to long an uptrend like what we had here in Bitcoin. So if we long an uptrend like this is buying the dip, because the price is going down, we do have dips and we buy. But if we long a downtrend, we are not buying dips, we are not buying pullbacks, but we are potentially buying lower lows, because the downtrend looks like this. So if we try to enter here in a downtrend, we are potentially buying just a further drop. So while you can buy dips a little bit less cautiously in an uptrend, you have to be very careful to try to long or to buy dips in a downtrend. That is what is happening now. So what is something that I would look forward to potentially long here? So we do have two scenarios here in Bitcoin, to make it very simple. The downtrend, keep downtrending, and we do for something like this, and we go for a further lower low below this low. So somewhere in the entry of my swing long. The other option is that temporarily or permanently, this series of bearish structure stop, support start to hold, and we have in some time frame or in a night time frame a level where this downtrend started to moving down. like we had here on the uptrend. At a certain moment, this uptrend stopped to move to the top right corner and started to move down. This can happen also for downtrend, of course. But since, again, we are sort of counter trading, looking for possible entries, what we would like to see is at least some sign of reversal. The first sign of reversal would be a market structure break. So, as you can see, since we started to break down here, we never made any noticeable IRI in any time frame. So always we fail to break any sort of structure. So the first sign is perhaps a visit in this support level and a break on structure. So in case we see a break on structure like this, then we can look to buy for a possible dip and a reversal. That can be a reversal on the 4 hour, on the 1 hour, and we don't know then if this reversal, in case it would happen, would be a potential reversal that reverse this whole downtrend. So major difference of buying these dips here in this uptrend is that we would like to see some further trigger, not confirmation because in trading nothing is confirmed, some further trigger to see a potential switching structure. That is practically, very simply put, what happened here. So we did have a downtrend. We did have, just to show clearly the chart, we did have a clear downtrend coming down. Then at a certain moment, Bitcoin decided to break the 4-hour structure. It break the 4-hour structure here. After this break of structure, instead, so printing a fresh IRI, after this breaking structure, we stopped to print in this time frame lower low. So we didn't came down to break this last lower low. But after this fresh IRI, we started temporarily to have a bullish structure like this. So we want to see the same. We want to see the same, potentially down at interesting level that is support and demand. So it's down here at this level, more or less. Now we are in the Fibonacci, in the golden pocket, that is this 0618 and 065, or potentially here 75. So price coming here, potentially breaking a structure and look for a move high. Why? Because if price have to go higher, he has to start this reversal, this move with a bullish market structure break. Without bullish market structure break, we are potentially simply buying all this dip going down. So any sort of reversal must start with an initial market structure break. So without market structure break, we are not interested on doing any long or bullish business here. In case we do have a market structure break, we always try to work in the market in our favor. We don't buy the higher high, but we wait for a lower high. So exactly the same that happened here after this market structure break and the following lower high. So waiting for a trigger. In case we have the trigger, we don't FOMO, we don't chase this break, but we look for potentially in this case, a dip of a 4-hour potential market structure reversal and enter on the dip. So for the moment, no interest in short because what I explained, the time for shorting was up here in the highs and not in the lows, and not trigger for long because it's a downtrend for many aspects that I explained. The bias is bearish, so we wait for any sort of market structure break to develop any interest on long exposure. Then with the trading light, with the HeatMap chart, we can see that potential interest for this reversal in terms of liquidity here down at 80K, where there is the next liquidity pool. 80K would be exactly around the 0.75 Fibonacci level that is now lying at 79.6. So very close and could potentially be a week to take out this liquidity. What we would like to see also on the Velo chart is a continuation of this declining volume we had here. So When we started to drop, volume started to move high on this area here, and we started to drop. Now volume it's again drying up. That is potentially signaling a bearish or seller exhaustion so far. Same, we already had a nice liquidation event, but if we go down to take this liquidity at 80K, probably we will see also a spike on the liquidation, and this liquidation hunt could be a possible level where we can notice some local price reversal. Finally, just to check the aggregated chart, we see that once Coinbase gave up the strong buying, Binance started to have the upper end. So if you see here in the chart, over the past weeks, we had this very strong fight among within Coinbase and Binance, where Coinbase was strongly buying and accumulating, while Binance was strongly selling. The moment that Coinbase started this aggressive buying, Binance started to have the upper ends and price started to drop further. So we would like to see, in case we visit this 80K or in case we start a price reversal with some sort of market structure break, either in the 1 hour and the 4 hour time frame, we would like to see some volume picking up. Volume similar to the one we had, for example, here at the beginning of March. 2nd of March was more or less here when the price bounces, where we did have a common agreement on buying with Binance, spot pairs, and Coinbase all started to buying together. So now we let especially Monday to develop, see what the chart will give us, and try to look for possible entries. In case we fail to form anything interesting down here and we go higher, level of interest for short remain supply here. That is the last supply that we form before the trigger down, or again moving higher. Anything on a time frame below this lower high remain a bearish retest. So best area to be short is again around this resistance, around this supply, and around the former support level of the former range that now turn into resistance, but not, at least for my style, down here. So I hope you enjoyed the video, that everything is clear for the bias for this week. Then according to what Bitcoin does, we can explore further altcoin and other chart. But for the moment, having a good read and waiting the right triggers on Bitcoin is of paramount importance to form the correct bias and to try to trade the market on the right side. So if you enjoyed this video, please make sure to subscribe to the channel and leave a like and a comment. Stay safe out there and have a very peaceful week. Enjoy.